All right. Hello, everybody, and welcome. And now, unfortunately, today may be a little bit of a shorter stream, but don't worry, we will be doing a very quick synopsis of what we think for the markets for the week ahead. The reason why the internet is a little bit laggy, it's nothing we can do about it. We tried our best, but we are out and about at the moment, but we always want to be coming here. If you do enjoy these streams still, smash that like button. Do remember next week, we're coming back at you with over an hour of content into the live stream. So we'll begin here with just quickly discussing a couple of big factors. The first factor, of course, is the S&P 500. Where did we hit? So I think everyone, as we join in here this morning, would know that we actually did hit what we call the 20 exponential moving average, and that's basically mean reversion. Now, the 20 MA is technically the technical mean reversion, but in markets that are as speedy as this is a critical point, and something that we thought that we'd get at some point. We did get it. And you also notice that it kind of marks up very well here with these lows of 43, kind of 30 to 40. Now, that is a very critical zone. So there's no doubt that around this point, we do expect some bounces. Let's talk US 500 first. Then we'll go through some of the commodities and also some macro perspective here. But this is technically where bulls should find some buying pressure. And I've kind of thought about it a little bit, and I've come up with the concept of, I think there is maybe a potential further rally. So I could see like a pullback into potentially a rally here into the 44.50s. And then at that area, somewhere around 44.50, that's maybe where the sellers are going to commit further this week. And I think this is kind of like a relief rally at this point. Now, what are the perspective of down? Well, we've got, of course, the China situation. We've got Jackson Hole this week. And we have, of course, yields. And I do think that everyone needs to be spotting their yields this week. You all need to have certain things. Now, first up, are we going to get a recession? Everyone starts talking about that again. Just remember, until yields uninvert, that is, they go below 1%, which could be happening sooner than you think, we usually will not see any type of recession. Now, remember, the US 2-year is now going up at a slower pace than the US 10, 20, and 30-year. And what that's doing is it's uninverting yields at a faster rate. You can see here the US 2 versus 10, which I'll put in the next video, which we do here on the channel. Thank you so much also for the support recently on the videos. Have you been enjoying them? I hope you have. We've been pretty right on August together in terms of what we think. This would also theoretically be a weaker week in terms of we might see a rally into a drop based on statistics, but look for the fear of the unknown. And this is what we're talking about when we talk about fear of the unknown. It's going to be the US 10-year and 20-year and 30-year. Mark new highs, okay? Now, they're not all-time highs, but they're new highs. And when we enter into these periods, that's when markets enter into fear. So effectively, this is where it is. US 10-year, US 20Y, US 30Y, mark all of the new highs. Be aware of when that happens. And if the markets are actually going up, I said this to the private community in the macro week ahead that I do, if you're ever interested, free 7-day trial there, you can check it out, that when we get these types of things like we're seeing here today with the US 30-year, we're seeing new all-time highs, which is kind of marking that if we get rallies, theoretically those rallies could be false. Now, what do you think about that? Is that correct? And sorry if the lag is here. Thank you very much, Pharrell. Thank you very much, Torpy. Thank you very much, everybody else. So it's great to have you here. So basically this is something I'm absolutely looking at. Another one that you're going to be wanting to watch this week is JP10Y, because of course we still know that the government bond yields in Japan are part of the problem. And I know, yes, it's lagging up here a little bit, but this is going to a new high at the moment as well. 0.7, 0.8, 0.9, all the way up to 1. Mark them on your charts. Be aware of where they're at. Okay, that's the first thing I think. Yields, 10, 20, 30, mark when new highs come in. If they do keep accelerating and we see relief rallies in the S&P, the Nasdaq, the Russell, the German DAX, that's going to be important. Now, why are we seeing these rallies? Well, think about the sell. The sells were pretty aggressive. They sold into supports. We saw semiconductors hit a support. We saw the German DAX hit the perfect support level. And now we go back into what we call a drop and a base and a drop. And it's the same thing on the S&P. It's the same thing on the Nasdaq. It's the same thing on the Russell 2000. They all look very, very similar to this. So if bears are going to take control, it could be that they control this area type like here, or it could be that they actually push a little higher. So in 1900, I wouldn't discount it. For bears, you're looking looking at these last drop bases. So you're basically saying, where are these bases? These are the key levels for us to be checking. And, you know, that's the big thing that I think is kind of the story here. We've got bases, 15,050, somewhere around there, 15,000 to 15,050 on the Nasdaq. It's possible. We do have some nice rally relief here where the markets have found buyers. We think the dips at this stage could be purchased. But what happens if the S&P 500 closes underneath 43.30? I want to ask everyone here, what do you guys think happens? Where do we go next? 43.30, put it in the chat. I'll highlight whoever I think is getting as close as they can here. Jonathan says, I smushed the like button. Is that okay? That is no problems. Thank you very much, Jonathan, for your support on the channel. While we're waiting for your response on what you think is going to happen if it gets underneath 43.30, let's talk about the bullish implications potentially moving forward. So we talked about the McClellan oscillator here, and we talked about the idea that we hit negative 100. Now, you can bring that up on your charts by literally loading the lazy bear indicator, which I think I've done here. And what I've done, this is actually the thumbnail of the weekend video. And what I've kind of summarized is this. When it goes negative 100, the stats over a period of time have been positive. Now, that's over the next 30 days. So what we're saying here is that when we hit negative 100, markets can go much lower, but in general, it does have a turning effect. So what that means is that this may not be the low necessarily, but it is an interesting stat that's mostly on the bullish side. In fact, it's an 80% bullish stat when we get oversold to this perspective. So what happens? Well, we know that August and September in pre-election years, they basically suck, okay? They're no good. They're bad. We know they're bad. They're traditionally bad. Now, that's just a stat. Again, it's just data. But what we also know is a golden pocket sits at 4150-ish to 4200 in the market. So that is taking the last low to the current high. So if we breach this level, let's see who guessed here. A few people are saying 4200 SPX, 4200, 4150, 4200, 4150, 4200, 4172. I love the accuracy. 4190, 4200. Well, you guys are all pretty smart then. So yeah, I think capitulation could take hold and we might move a little bit lower. So let's talk about what's the worst case from that low of Friday. We're talking here at about 5.6. Now, of course, you could say, well, that's not even near the worst case, Tommy. Could get absolutely smashed. It could. But do remember in the video we did on the weekend, we talked about this idea that when the US 10-year goes to these highs, something breaks. Now, I want to ask everyone in the chat here, what has broken? Do we know what it is yet? Because something has broken every single time this has occurred over the last couple of years. And every single time something breaks, the central banks have come in and supported it. And that's why the market's not freaking out more than it is right now. Now, it should be freaking out way more. But that's the problem with the bear thesis, and it has been, is it's taking so long to take effect. And then every time a bear gets a win in these markets, that is, the bear goes, that's right, I told you, the macro's bad, it's going down, suckers. Well, yes, it is. At the moment, it's mean reverting and everything. But at the same time, we're not getting that super fearful, huge VIX spike kind of effect, because the markets kind of know that the Federal Reserve / every other central bank is sitting behind going, oh, how do we figure out how to kick that can down the line into 2030 or sometime when we don't really care about it? And that seems to be what's happening here. So people are putting in what they think the black swan is. Journal of Stitchery says the black swan is China. Ganesh says it's bond yields. Interesting. And then Mike says, what about zombie companies, regional banks? Yeah, zombie companies, definitely an underlying statistic that I think I've talked about many times on the channel. I definitely think it's the big problem for the economies moving forward. You know, but the Fed at the same time does want to kill some of these. I think there's some crazy stat. It's like a crazy stat. It's like 10% of something like the almost the 4,000 companies on the US plus stock market, 4,000 plus, are like zombies. That is, they are loss leading companies that have no ability to pay off their debt in the current environment. So that's crazy, isn't it? That's 10% plus. Now, I'll have to verify what the stat was again, but it's pretty bad. So I think zombie companies could be it. And of course, predicting big crash like that is statistically difficult. And that's the problem. At this stage, what I'm seeing, and I've read a lot of reports, okay? A lot of reports over the weekend. I read reports from Goldman. I read reports from JP for you guys. I read reports from everywhere around the world. Too many reports. Probably about 150 pages of reports plus, and they were boring. But what I noticed in all of those is that macro people basically are confused. There is a case here for soft landing, and there is a case here for something more sinister. And they are super confused completely. Luckily, on this channel, we talk about price action. And you know what some of them literally said? Move towards price action because we don't actually know what the hell's going on. So I think that the problem is that the evidence that we have, the limited information, this is why I needed this quick stream today, may be too limited. And that's an issue because making these assumptions that, China's going to die and therefore everything's going to explode because they've got problems in the property sector, maybe you're right. But you could be very, very wrong. And then, of course, this could be just a sell-off into a dip buy. So at the moment, what we're doing is we're using price to lead us through this noise. And it is incredible noise and kind of scary for some people, of course, because there are huge implications here for the second largest economy in the world having so many problems. We already know about it. The question is, why are they not doing anything about it? And I've read reports that Z doesn't want to. I've read reports that he's wanting to take it away from a debt economy, all sorts of things going on. So I think, and I'll ask you guys this, do you agree that over the next 1 to 2 months, maybe the best thing to do is to actually follow price? I always think following price is pretty good. But what do you guys think? Is it better to follow the price or the noise right now? You let me know in the chat. Black Swan equals total debt. Fritz is not wrong. That's pretty much the long-term Black Swan. Chartista. I love Chartista. What a great name considering we are now in Chartista territory. Sounds like we're going into some chop. I do think that we're probably going into a period of time where, historically, what has happened? It's done this. That's actually the historical style of a pre-election year through August into September into October. Here is something that I shared over on our Twitter, X, whatever the hell you want to call it. Follow us at fxevolution.com. And you'll notice here, this is the volatility. So we tend to see the volatility spike and then kind of flatline at a high rate. Now, during most non-pre-election years, it actually keeps going up. This is what happens in terms of the market. So the market tends to go a little bit worse, doubles off, comes into October, and tends to find a little bit more recovery. So I think that's something that's important to note. We've got this McClellan oscillator. We've got, at the moment, of course, bullish percent index is still dropping off quite substantially. I don't know if we can tell that it's in the lows, but we do know that 4330 is a serious S&P 500 level. And if that level gets taken, we have to expect the next level to be around 4150 to 4200. Now, if we get a turn, don't worry, we'll be updating on the channel if we believe we've got a significant turn here in markets. But I think price action is the key. Let's have a look here. Oh, chocolate curry. Yes, you would be correct, but we'll see about that. JJ says price. SS says price action. And Nikos says 100% price action. I really feel like it is a good big thing here. John G says Evergrande just filed for bankruptcy in New York, in the US. There's no way that's bullish for the market. Technically, it's not bullish. There are so many companies and death knells across the board. That's a massive, second largest developer, of course, and it's going underneath. We have to believe that they looked at it. If you thought back in 2008, this is a situation where you would say, oh, well, the market's about to die. That's what actually happened in that style. The problem is that we have to say, well, like never before, central bankers understand that they can use unlimited asset sheets to somehow plug holes. So unfortunately, until we see, like maybe John, the best thing is to actually watch the price action, day trade, scalp, do a bit of swing, and then make a more, a better decision once the things are clearer. And there's nothing wrong with that. Remember, as traders or investors, you have to make a decision. If you're an investor, your decision is basically, I want damn good ratios. And I have a simple way of doing that. There are maybe 7 metrics that I use. One of those metrics, of course, I've talked about before, is forward PE. Of course, that is only one metric, but it is still a decent metric. Is the market cheap right now? No. Will it get cheap in the future at some point? Yes. How do I know that? Because it always does. What's cheap? Well, arguably, cheap is below the average. So something underneath 16.5 is getting cheap. Something under 15 is getting damn good. Something under 12, oh yeah, and that would be pretty sweet. But at the moment, of course, we're trading a much higher than that. So let's just jump through a whole bunch of stocks here. Our thoughts for the week ahead are we've got the McClellan oscillator doing its thing. That usually means that we've found a temp bottom over the next 30 days. That doesn't really help us too much, but of course, it does tell us that thing. The next thing is that, of course, yields are going up. Remember that. Yields are going into the unknown. That is usually a capitulatory type of thing. Markets hate fear. They hate the unknown. That's where we're heading. If we do see those spike 10, 20, 30 year, we go up in the market. That's usually probably a false move, which we'll talk about in our videos. And from that perspective, if we close underneath 43.30 on the daily from a technical perspective, we could be going into a serious level. And that would push us back into the 42, 41.50. And at that point, we have to reassess. Okay. And that's what we're thinking at this stage. We do also know that markets haven't been incredibly defensive on the way down here. If you look at the last 5 days, it's been a strange amount of inflationary style trading, which has still been energy, metals, those types of things. They're the only two markets up. And it's been, not really a defensive style market. So that is weird in itself. Let's go through now just a couple of other things. The volatility, the VVIX, watch that. Copper, of course, floating around, nothing too much on that one. The dollar is still trapped in range. We will update if we feel like that range has changed, but at this stage, it's still technically bullish with no turn on the dollar at this point. If we go over to treasuries, now these are going to be interesting. Yields like 10, 20, and 30 year look like they're going to make new highs. If that's true, treasuries will make new lows. And I still think that 90 and 88 could be very interesting prices. That is a multi-year demand low. So something we're looking for in treasuries, and it would wipe many people out, unfortunately, that are trading treasuries that have stops underneath this level. So I think we're getting to a very critical point for treasuries, something interesting to watch. I also think high yield junk will be an interesting watch this week because it at the moment has been holding firm in a bit of a channel here for a while. So maybe mark the lows and the highs out here for high yield junk and junk style bonds. That could be a catalyst that actually is underneath our own eyes and we're not maybe looking at it enough. What about oil? Well, oil is picking back up, but no swing to the short side. People asking about this. 78.64 remains my swing short side. So at this point, it's still oil is theoretically swing bullish. And if you're going to be a shorter, it's coming into that range. So if you pull like from here to here, you'd find like a 61.8 would probably be sitting right in there. I think that's probably the way I'd look at it. Tesla is up today and it is going to open as kind of like an island reversal. So that's an interesting fact. Here we go. We got gap down. We've obviously got a gap up. That could cause further momentum in the bullish side. Again, S&P 500, those levels may make sense. And we might see a little bit of reprieve or relief here in Tesla. I've said this once before and I was wrong where I claimed 140 and I think we got to 150. What the hell was it? Let me see here. So I claimed 145 and we got 150. And we didn't quite get my 61.8. We didn't quite get the pullback I wanted fully. So am I wrong here? Well, I mean, we got the pullback. It was pretty good. But then it just turned just before that little target. And I'm wondering, is someone on Wall Street watching us? I don't know what they're doing. But anyway, in this case, yeah, I think that it's still possible for Tesla to weaken. So even though it might strengthen here a little bit, we've got a cross of the 20 and the 50 exponential. That's usually not a super positive sign, though sometimes it does happen right near those lows. Remember, crosses are not good enough. If crosses worked, hey, you could put it in a robot and be easy to do. The next thing would be, of course, that we see the markets come down. I'd like to see Tesla hit the daily 200. And the daily 200 sits on the $200 mark. And that would be kind of like a nice pullback of this run. But again, if you're a Tesla investor, I mean, this is still a relatively significant pullback on where it is. I still think that you've got problems in consumer growth here because we're seeing credit cards going up, delinquencies going up, pretty much all that core retail spend, from what I was reading in research reports on the weekends, coming off people literally borrowing on credit cards and spending out of their own minds. So I'm not sure whether that's going to hold up, but the charts are the charts. And at the moment, we've got a little island reversal there. Meta, not quite to the 20 moving average. Obviously, that's the case. Semiconductors, mark out 143. I think that's going to be critical on the chart. Should we go underneath it? Nvidia. That is this week. You've not to keep an eye on this one. Right there, you can see plus minus 11.5%. Snowflake, another one that's going to be interesting. But Nvidia, I think it is everything, along with Jackson Hole and what the Fed's going to say, and along with China and the storyline coming out there. As this kind of stuff, comes through the lines and we see what they're doing, the market will adapt to it accordingly. Mark your German market as well. Mark out, 15,460 and below. That's also going to be a critical level for the bears. But look, the bulls have found a zone that's really important for them. That's how I see this market starting off here on Monday. That's how I said it on the weekend. That's how I said it last week. This is, 4,400 and 4330 were our key zones. We hit them both. We found nothing at 4,400. We pushed straight into 4330. We bounced off that to get almost a perfect max pain finish, which was pretty incredible. So options certainly did what they needed to. And now we are at a point where we are seeing the potential of a bounce. And that doesn't mean that the bears have lost. It just means that we need to play, a bit more carefully here. And I think being nimble and fast might be the best way in the markets. But we're not back to a nice multiple yet. I will update over on Twitter X, whatever it's called, if we get nice multiples, if multiples start to come back into ranges. And that would start to look more attractive at like a 4150, 4200 from my perspective. Let's read the chat here in terms of what you guys are thinking. And JJ says, I think if it breaks 88, the carry trade by Japanese retail will cause the treasuries to fall even further. Could be interesting, JJ. We're going to look for a turn there in that demand zone. And we always use technical analysis. Remember, buying the V is better than buying the dip. Mitchell Miller, thank you very much, Mitchell. It's a very generous donation here. $50. Wow. Thank you very much. Hey, Tom, I haven't missed a video or live stream. Yes, I appreciate that very much, Mitchell. You're always a great support here of the channel. You're still the best of the best. Appreciate it. Thank you for all that you do. No, thank you, man. $50. Wow. Always great to have you here, and I hope you've been doing well in the markets, and I appreciate that you've enjoyed the streams. We'll do a couple of little updates here, I guess. Thank you to Mitchell. So these people can thank Mitchell. We'll go with Richard first. Richard was just above Mitchell's super chat. So let's just quickly move over here and load that up. And we've got here, what does he think of Netflix? We'll load Netflix on the chart. We'll do a couple of stocks here, chuck them in the chat, and we'll do a couple here for Mitchell's super chat. First up, we got in Netflix. Actually looks like a Head and Shoulders. I got to be real. Like, you look at that on the daily, you're going to see a Head and Shoulders. Does anyone see that? Doesn't that look like a head? That looks like a pretty good Head and Shoulders. And if you take a Head and Shoulders, I always like to proof it. Whenever you look at a technical, patterns are patterns. They're okay. But of course, I love to proof, patterns. And what a proof of a pattern means is that when you're taking the direction that technically a head and shoulders should go the distance of the head, to the neckline. So if you actually proof that, that would go back to around a 200-day, which pushes you to about 353. I cannot say I like the chart. I think it looks really bad. I think that if we do get a relief rally, we're going to go into two moving averages, which obviously act sometimes as dynamic resistance. And I mean, it's a pattern. That's what I think it is. And the pattern would proof to here, which would be a decent demand. So I think that's my kind of opinion there, Richard, on Netflix, at least from a technical perspective. I think it could go lower. Chocolate Curry says, do you have time for PayPal? We will give it a shot here. Thank you again to Mitchell. Let's do PayPal. And PayPal is one that's been getting slaughtered and recently just took the low, which I think is really important to note. So a few of these hyper stocks are coming down to nice levels. Now, PayPal is, of course, one of them, and it's taken out the low and then found a buyer. And that's kind of like, something that I always look for when we see these types of things. It's kind of like a very strong trader has come in and said, hey, I think it's a bit low, and I think people just got absolutely destroyed. So in general, I would usually look for a little bit of a high to be made. and then maybe a pullback. It's a risky style trade with obviously stops below there. You have to let it go if you're in those types of trades because they can go very, very bad. But it's not on a real turn yet. It's just a speculative play based on a new low being formed and that huge kind of candle coming in. I'm sure there's some volume there as well. I don't think there's enough enough structure at this stage. I'd prefer it does something like this and then that. And then if that had happened, well, I'd be much more bullish on it. But this is across the board. There's a few other stocks that have taken new lows. There's SE, and yes, unfortunately, this is quite laggy. But SE took a new low off the earnings. Another one I want to look at was PLTR, which is, of course, many of your favorites out there. And I don't hate on the prices of PLTR right here. I've obviously been negative on this stock when it first came out. I certainly was. I hated it. I thought it was crap. And I maintained that. At that point, I didn't like it. Back in 2020 and 2021, when we all talked about it, I didn't like it. It is, again, another one of those stocks that has found that 4330 style S&P 500 support. And if we do lose that support, don't be surprised at all for PLTR to come down quite substantially. In fact, I could see like a 10 or around that daily 200 to be hit. And I think that would be a very exciting level for people that are believers in this stock because you're basically getting a significant discount. The market's obviously tanking a little bit at that point. But, this stock, the one thing you can always say about PLTR is when it gets hot, that is earnings comes around and people get hyped, it's like a more quality kind of version of AMC or GME where everyone starts piling into it. It's kind of like SoFi. If you load up a SoFi, which we've traded before on the channel from a technical perspective, we've liked that before. Did I know it was going to $12? No, I didn't know it was going up there. But of course, we talked many times about 10 and we talked about 8 and we looked at it down here and we liked it very much. So that was thanks to you on this live stream and people like Mitchell Miller and others that were actually donating to the stream because we were pulling that through. And I think that was a big one. Thoughts on Disney? Yes, I owe it to you guys to cover Disney. I'll also just quickly have a look here at Intel. So Intel's back at that kind of support line as well. Interesting. Intel's obviously more of a trade than a long-term investment. Historically, a horrible, horrible, horrible semi. Disney is a conundrum because it really, really should have. It is hanging on by a little bit. And what I mean by that is that's pretty much where your stop losses are, most people. And look, Disney's up here at 86.05 or 0.05 today. It has usually horrible pre-election years, and it's living up to its name as being a horrible pre-election year stock while they're burning the company, it seems, with all of their new destroying of great franchises, etc., in my opinion. Anyway, I don't even know the last time I looked at a Marvel film. I've already said this many times on the stream, but whatever. My opinion, just like most of our opinions, mean nothing. We look at price action. I did like this rally. I did like the drop. I did like this level. There's no doubt. It's holding on by a thread. And we have absolutely no reason to believe just yet that it's doing better. Look for that doji, this one here, to be closed above to really show us that this thing's probably going to hold this low. At the moment, it looks pretty bad. You load up a weekly. Looks kind of shocking, to be honest. You can see where the wicks are, which are through here. And you can obviously see where, this is it. It has to find this. If it doesn't find this buyer, it could be moving towards $80 and underneath. So we're talking about 79. And again, it's trying to go against, what is the trend, which is, of course, down at this stage on Disney. So Disney needs to find buyers pretty much today or the next day. That's the big thing here. Torphy says, I've got short on the fib on PLTR. Yeah, I don't blame you at all, Torphy. The strategy I use on this type of thing. We've talked about it before. So, yeah, that's a big one. What about Nvidia? Sure, we'll load up Nvidia again, thanks to Mitchell. And Richard says, save, man. I haven't checked anything from Disney in years. Look, I watch the Star Wars stuff, but honestly, if you haven't seen Andor, that's pretty good, in my opinion, if you like Star Wars. But that other stuff they've been putting out, it's some heavy trash, guys. Again, my opinion, don't be angry if you don't agree. I just think it's trash. And that's my opinion anyway. All right, let's go over here to Nvidia and let's check it out. Now this rejected that 61.8 area. We like that very much on the drop. The problem with Nvidia is I don't know, like you can see here, pre-market is getting all excited. Everyone's hyped for this earnings. This is a serious, serious thing. I mean, we have the stock that started everything in terms of this 4,200 to 40, whatever it was on the S&P, the real breakout in the Nasdaq. Everyone's hype of this year, Chat GPT, everything you want to think of. All the bullish cases of this year almost were hinged on the beginning of the AI discussion. And of course, I feel like this is the poster child for that. So sentiment rides high on this one. I want to ask you, the members of the community, everyone out there in the chat, what do you guys reckon? What do you think Nvidia is going to do? Is it going to beat? And even if it does beat, do you think the stock's going up or down? So I want you to say definitively down or up after earnings. Let me know in the chat. Let's see what you guys think. Actually, you know what? We'll do a poll. And we've got to do a poll for it. I think we've got to do a poll. Let's get this up. Get the poll started. Start the poll. Nvidia earnings. All right, here we go. Up, down, bang. It's that easy. Give it to me, guys. Price action. This is what we're talking about. We're saying price action. Up after earnings. I don't want to know up until, I would say up until earnings, because unless some big player comes out and says, oh, crap, I got to get out, I would usually say up until earnings. That's historically what it does. Nvidia loves its earnings like an Apple. It always loves jumping in. It's like the new 2020 version of Apple. It's the new decade Apple stock. John G says, I trade 3 stocks back and forth, SPY, Tesla, and Nvidia for 6 years. I have no idea on Nvidia, and I'm not touching it. There we go. That's coming from someone that's done 6 years of 3 stocks only. Luke Schoon says here, I think Nvidia is going down. It's going to be sell the rumor and buy the fact. Ooh, that's an interesting take there, Luke. That's up there. Jan says, up until earnings, then down a lot, down 40 points, 60% IMO down on Thursday. 60%. I don't know what sports team you go for there. Someone can tell me. Is it the Cubs? No, it's not the Cubs. What is that? You go for some sports team, but 60%, hello TP. That is a wild call. I like it. I like wild calls. I vote down, but I've been wrong taking bearish positions on retail loved stocks before. Yes, and I'm staying away from it. Well, at least you've learnt something. Don't go against hyperactive Reddit stocks during bullish times. Sal says, my bias is down, please, Nvidia. And Bob says, massive island reversal. Well, yeah, I mean, you can make many cases across all sorts of things on island reversals and stuff here. Anyway, to summarize, guys, go back and watch the start of this stream. I'm sorry to keep it short here today. Don't worry, we always do 1 hour live plus. I know we do it. It's just a laggy fest and this internet is crap and I don't want to give you any worse. I had some stuff prepped. I had to talk about it. I do want to just reiterate that, of course, we believe that we hit a key level. There's no doubt. 43.30 is key. 43.40, 43.30 is key for the S&P. But if we get underneath, you know, my opinion anyway, is a 4,200, 4,150. We know August. We know what happens traditionally. We know what happens in September. These are months that give us the volatility, that give us the chop, they give us the day trading, the scalping, all this type of stuff. And then we have to find out what happens in October because it seems more plausible that the stats anyway point towards bullishness. Now, I know a lot of people will disagree with that statement. I'm just reading out the stats. We have to go both ways. It's kind of like on this channel, you know, I was a big bear boots everywhere over 4,200, no doubt. And then we broke 4,200 and I was like, oh crap, this thing's going. And there's nothing you can do about it. Sometimes as a technical analyst or someone that's reading price action, you have to recognize when you're going to lose and when you need to cut things up. And that's really the difference between, you know, I guess a pro, a beginner, and someone that just, you know, is kicking ass. And it's that little factor that when you realize something's coiling and it breaks out, and I wanted to mention this because, of course, something did coil and break out the other day, which is Bitcoin, that something serious is potentially happening. And when we saw Bitcoin do what it did, of course, it has come down to 26,000, hit this demand. it does point towards further potential weakness here in the crypto. I am bullish on Bitcoin actually moving into 2024. And I'm very excited to do a special on it on the channel. So make sure to subscribe for that if it's your first time here. But yeah, Bitcoin's going to be an interesting one, and we'll be looking at it very closely moving forward, because although most of you probably on this channel don't care about it, I cover so many things because sometimes I like stuff, and we'll see. We'll see. I like to investigate the old halving cycle with this one. What date's the halving? I can't remember exactly the date. Someone here in the chat will have it, but it's first quarter or something in 2024. Can't remember now. I'll have to have a look. All right, what else have we got here? Mid-April halving. There we go. Thank you, Gary. Appreciate that. Algos don't care about technicals. Only pure price is the matter. Well, don't worry, man. We also look and we find the dark pools here on the channel as well. And of course, we look for all of the built positions. So look, market's coming back down here. Got a little bit hyperactive this morning. We're looking at potential dip buys throughout the start. If the market does just choose to continue to sell, though, and it gets through 43.30 on a daily close, that's really pushing towards that idea of 4,200, 4,150. Of course, all these things are just based on stats, and we just cover them. And of course, we look for price. We hope you've enjoyed this Monday stream. Thank you very much for bearing with us through a bit of lag and, of course, bad audio. But I always bring it to you, and I do appreciate each and every one of your support. So thank you so much. And do remember as well, if you're wanting to hang out with us in Vegas and, of course, join our conference, you can jump on over to fxevolution.com down the bottom down here, and you can get the early bird offer. It's still available for the month of August. And they've got some amazing speakers, bigger than even this channel. We've got a whole bunch of CMT guys coming, and some of these guys have, let's just say, $1 billion experience, plus they're experts in several different indicators that we don't always use here. Anchored VWAP, one that I like very much, and a whole bunch of other stuff. I'll be doing a special as well on dark pool liquidity that we've never talked about on anything in these channels. So thank you so much, everybody. We hope to meet a few of you in Vegas. And of course, I'm looking forward to that conference. It's thanks to you guys that we can even do it. And more importantly, we hope that this week turns out to be a bit more predictable. We'll find out how we end up getting these today's action going up. I kind of hope to see a rally over the next couple, maybe 2 days, that we can then find those critical levels. But we'll be watching very closely the US 500. And of course, we'll be watching a lot of these stocks. Semiconductors, set the alerts. US 10-year, 20-year, 30-year, we'll be talking about it. Thank you for that. Bye for now. Ciao, ciao. When is the conference? The conference is in September. Late-ish September. It's all on the website, fxevolution.com. Most of the speakers are up now, including myself. And there's plenty of good ones. So that'll be awesome. JJ says, as we broke Friday's high, be careful on the shorts today. I do think, JJ, that we've got to be a little bit careful, mostly because there's been some heavy selling. We know where we've got drop bases, but this one in particular is the most interesting, which of course sits around 44, kind of like 40 zone. Anyway, guys, thank you so much. We wish you the best week. Bye for now. Ciao, ciao. And thank you again, Mitchell.